What is going on, everybody? It's Stas here. Welcome back to another video. I hope you guys had a great weekend and are ready to get back into it. I for sure am. And in today's video, like we do every single Sunday, we're going to break down some stocks, some charts, my thoughts on the markets, what I'm looking out for this week in the markets, and overall what my game plan is. We got to talk about a bunch of things today, so if you guys find value, hit the like button, subscribe, check out my Patreon, link down below if you want my buys, sells, call outs, morning update videos, plus more. All of that's on Patreon. And with that being said, let's get the party started, guys. So before we even go over the 10 stocks that I have in my notes here, before we go over what to look out for, let's talk about what happened last week and the overall trend of the markets, which at this point, come on, guys, you should know the overall trend. We've been downtrending at least the past month and some change at this point. And if you look on the 4-hour chart, we are struggling. And I've said this many times, but I'll say it again for the new viewers out there, or if you've forgotten out there, we're struggling right by the 180 moving average, which is right around $442. And that's a bit worrisome considering that is where we got rejected at that same moving average back in the end of September and in the middle of September. You can see we got hit middle of September at 447, end of September at 445, and now in the beginning of October, middle October, as we're getting into the middle of October, we're getting hit at about 442. So in my opinion, for the bulls to really get this rally going, we got to start getting out of 443, 445, and especially out of that high point from the end of September. So I'm going to put another alert here at 446, which was that high from the end of September. And if we start getting out of there, that is when I could see some steam to the upside for the bulls. And for this week, overall, guys, we have the CPI number. That is the biggest thing that's coming out this week on October 13th, which I believe that's on Wednesday at 8:30 a.m. on the East Coast. This is such a big number. I can't even say it enough. It is such a big number for us to see how inflation looked in September, because we know it spiked up in, I believe, July, and then we started seeing a little bit of a drop in August. Maybe the previous month was a drop. I forget exactly, but you guys know what I mean. The months, I'm mixing up the months in my head right now, but we've seen a little bit of a drop in the CPI. Now, I want to see if this drop sustains. Is it going to drop even more, or are we going to see a surprise pop in the CPI number? And of course, this is going to fluctuate the markets up or down pretty drastically. So at this point, for us to see more direction, we got to get that CPI number. We got to see what that's looking like, as that is going to affect the Fed's decisions, the overall market, and we'll get some direction at that point. So let me know your thoughts. And when it comes down to QQQ, it's the same thing, right? We're seeing resistance right around the 180 moving average on this 4-hour chart, which is where we struggled in the end of September. And you're noticing a double top at about 365, and we ended up selling after that double top. Now we're holding 360 by a thread. So at this point, it looks like, believe it or not, the downtrend is continuing, and I wish I could break down the futures in this video, but I can't, considering I'm filming this at about 8:50 a.m. on the East Coast. So let me know in the comments, what are the futures looking like? Are the futures heavy in the green, heavy in the red? Are we at break even? And I'm going to be watching the futures tomorrow morning. We'll talk about them in my Patreon video, because I do make a Patreon morning update every single morning for my Patreon members that sign up to the top tier. And again, if you guys are interested, that is linked right down below. So let's talk now about some stocks, as earnings season is upon us. Finally, it was a little bit boring the past couple of weeks, but now we have a lot of the biggest companies out there starting to report. We have Google later this month. We have Twitter. We have Apple. We have a lot of companies coming around here, guys, to report. So let's start off with some of the lighter reports, which are still pretty important. Number one is Domino's Pizza, ticker symbol DPZ. And I couldn't tell you how many times I ate this stuff in college a couple years ago. Well, yeah, now it's like 5-6 years ago. I ate this stuff a lot. A lot. I couldn't even tell you how much I did, and I regret pretty much every time I ate Domino's pizza after I ate it. That is, but overall, they're reporting earnings on the 14th at this point, which is on Thursday, and the stock is down from 550 from the end of July. Now it's trading at about 480, so it is down about 11%, putting it in correction territory. But by the looks of it, the uptrend is trying to hold, at least here on the 4-hour chart. You guys can see that. And their last earnings report, which is why I am dialed in for this one on Thursday or Wednesday, whatever the heck that day is, the 14th. I think that's Thursday because the CPI is on the 13th. Their last report was amazing. You guys can see the stock went from 475 to 550 literally when they reported. That was such a big move of 13%. And now we've pretty much lost that over the past 2.5 months. And by lost that, I mean the whole gain from that earnings report we lost throughout the last 2.5 months. So now I want to see if we get another pop in the stock. Do they report good numbers? Are people still buying Domino's, which I assume a lot of people are? Me, admittedly, I haven't eaten Domino's in a long time. After I just told you guys I ate like a pig when I was in college. I would eat it all the time at night, and I regretted it almost every time. But in the moment, it was nice, but afterwards, not so nice. But let's not relive those horrible memories, guys. And let's look at the 3-year chart. 3-year chart, we're noticing it's retracing down towards that 50 moving average, which could mean it goes a bit lower considering the 50 SMA is right around 430, 440. Now, if they do very well with earnings, I doubt it gets that low. And on the yearly chart, let's pop that up. Yearly chart shows we're bouncing right above that 180 moving average at about 440, 450. So overall, guys, this pullback of 11%, it's putting it in correction territory, and I'm watching it this week heading into earnings. JP Morgan, JPM is another one that I'm looking at like a madman this week, considering interest rates. The bond yields have been going up, not necessarily the Fed funds rate, but with inflation going up, the yields are creeping up there. I want to see the bank's earnings. I want to see what's going on there as we are breaking out now to all-time highs on JP Morgan, and not just JP Morgan. I mean, Bank of America is at all-time highs, BAC. Wells Fargo is also breaking out. I'm not sure if that's at all-time highs yet, but it's pretty dang close. At least to the high on the 4-hour chart. If you look at the all-time high on Wells Fargo, it's $66. That's before the whole fiasco that they went through, which I'm not going to get into in this video. And that stock cratered to $20 from 66. Now it's back to 48. So this one's recovering quite nicely as well, but it's nowhere near my favorite bank stock. In fact, I used to own it. I made a huge mistake by owning that stock, and I admitted that to you guys because I sold it over a year and a half, almost 2 years ago, I think. And I haven't owned any bank stocks directly since then. But if I had to pick a bank stock to own, it would definitely be JP Morgan, which is why I covered it in this video. So I'm watching the breakout here. We're trading well above both moving averages. We're seeing a golden cross. Again, we just hit all-time highs with earnings coming up on Wednesday. So I want to see their report. Whether we pull back, continue the breakout, we could probably make a move within that, move in itself. DAL, Delta Airlines, I've covered this before. The airlines in general, they're starting to report earnings. I'm very interested to see what DAL reports on Wednesday. Now that we are breaking out overall of the downwards channel, we're trading above both moving averages. We're seeing a golden cross, and now we're actually pulling back a little bit within the overall breakout, which if we do get down, listen to this, if we do get down towards that 180 moving average on the 4-hour chart at about $41, $42, which was support during the beginning of September, mid-September, late September, once we started rocketing up past $40 again, mid-40s. If we start pulling back 42, right by that moving average, I honestly suspect buyers starting to step in. I could see that happening 100%. So I'm watching DAL and all the airlines for that matter. Goldman Sachs is another one that I'm looking at. They report earnings on Friday. This one's trying to break out of the wedge. It's above the 50 moving average, but it's not quite yet above the 180 moving average. So if we start breaking 400, hence why I have an alert at 400, this one could start gaining steam, no doubt about it, with earnings coming up on Friday. So keep your eyes out on Goldman Sachs. And I'd probably, if I had to own two bank stocks, again, I said JP Morgan's one, Goldman Sachs probably number two. I think they're a pretty solid business, and they make a lot of money from investing, investment income, and so forth. But again, we're not getting into the rabbit hole of what bank's the best, because quite frankly, I'm not the biggest bank expert, which is why I don't invest in banks directly. I did with Wells Fargo, but I made a mistake there, cut the loss, and I haven't gone back since. And I really don't plan on going back, because if you own ETFs, which I do, you own banks indirectly within an ETF. Pretty much all you guys out there, if you own an S&P 500 ETF, if you own a dividend yielding ETF, for example, a lot of the time you don't even know it, but you do own bank stocks indirectly, which I already own ETFs. So I guess you could say technically I am in bank stocks, but I don't own individual bank stocks. Let's put it that way. So watch out for the break on Goldman Sachs. Snapchat is another one that I'm looking at this week. They report earnings on the 21st. Now we're starting to see, now that we talked about DPZ, JP Morgan, DAL, Goldman Sachs, those all report this week. Now we're going to start talking about companies that report in the following week and later on this month, because this week's earnings, they're good, don't get me wrong, they're exciting, but not as exciting as middle towards the end of, or really the latter half of October, which is when we're getting into Snapchat, some of the big tech names. So let's talk about that right now. Snapchat, SNAP, they report on the 21st, and this is clearly an uptrend. It's holding the uptrend, right? We got higher lows, one at 510, May 10th, one in the middle of July, and then we got one which was just last week on the 4th of October at about $70. We held it. Now we're ripping past both moving averages, and by the looks of it, Snapchat wants to go up, take out the high of $79, $80, and start ripping out towards that high from end of September, and maybe it breaks that and starts going mid-high 80s. And at this point in time, we went down 2% on Friday. We're trading at around $75 per share, and I think this could have some room to it. The rally could have some room to it, considering we are now breaking out, like I said, of both moving averages. So yeah, guys, Snapchat, I like it. Last report, they crushed. I mean, look at the stock. Very similar to what we saw with Domino's. Snapchat went from 62 a share all the way to 80 that day. I think that was the day where it went up literally like 15% after hours, 20%, and everybody was like, oh man, I wish I got into Snapchat. I was one of those people, guys, and now it's really squeezing in a ascending triangle, and who knows, man, it could be getting ready to get another squeeze after that report, maybe before the report, it could start moving. So we got to watch Snapchat. We got to watch Chipotle, even though their service has been pissing me off lately. I'll tell you guys right now, at least in my area. There's two Chipotles in my area, and they're understaffed like crazy. Let me know in the comments. I'm serious. I want to know if this is a problem in your area, wherever you guys are located around the world. Well, I guess in the U.S. is where they have Chipotles mostly. I don't know if they have any international locations. I don't think they do. But in my area, they're understaffed, the two locations, and they close early randomly, and sometimes I put in orders online because we can't go in and actually order normally like the stations, right? They still don't do that, I guess, because of COVID concerns here where I live in the two different locations. So you got to put orders online, but again, they're understaffed, so I put orders online sometimes, and then I go to pick it up at the store, and then the store is closed, and they're like, oh, we closed earlier. There's a sign on the wall or on the door that says, oh, we close at 5 p.m. p.m. today. We close early. Contact so-and-so for a refund. And I'm like, what the heck's going on? How is Chipotle understaffed? But it all makes sense considering a lot of people are having labor shortages. Well, businesses, not people. Businesses are having labor shortages. Chipotle is no different. People can't get people to work at these times, right? Especially these jobs where it's service jobs. Sometimes, I guess you can say FedEx is having problems. There's just labor shortages. And I'm seeing that firsthand in real life with Chipotle. And you guys got to pay attention in your everyday life. You see these little things that affect the economy. That's just the bottom line. And you can see these things sprinkled out throughout daily life. And Chipotle is one of those examples. And again, I'd love to know if you've had that same experience. Drop me a comment. And look, Chipotle now is trading a little bit off its high. Its high was $19.58. Now it's trading at about $1,800 per share. It's down about 6-7%. And it's currently a little bit under both moving averages. So I'm interested in seeing, do we get that death cross? Do we get a sell-off towards $16.50, which would be nice, ahead of earnings here on the 21st, same day as Snapchat? Or do we end up breaking out of the moving averages again? In my opinion, I would like to see Chipotle down a bit, and I'm not looking to FOMO into it here. In fact, I'm going to be patient on it. If this starts selling off, like I said, $15.50, $1,600, $1,650, right around that 180 moving average on the yearly chart. If it fills the gap down here, let me show you all with my oval tool. That is where I'd consider starting a position. But as of now, I'm just laying low with Chipotle, just keeping an eye on it. Google is another one that I'm looking at, which I'm super excited for them to report. They report on the 26th, and this stock is literally about to break out. If the markets start turning back up, let's say we get out of those main moving averages on QQQ and SPY, Google could start breaking out of its main moving average at about 2,800, and who knows, man, this could be on its way to 29.36, the all-time high, maybe even above that. Maybe it starts going $3,000 a share into the holiday season, again with earnings coming up on the 26th. I'm looking for the breakout on Google, so I'm going to put on alert, create alert, mark is at or above. Let's just put it at 28.50. We'll watch what it does from there. And Twitter is another one, TWTR. They report on the 26th, same day as Google, and this one is looking like it's trying to break out as well. We're in a wedge, lower highs, higher lows, or rather higher lows, lower highs, right? We're getting deeper and deeper into this wedge, and now we're trading above both moving averages, and I have my alert set at 65. I want to see if we start breaking out of the top of this wedge, we start taking out the high from the end of September, early September, late August as well, at about 66, 67. I think if we start getting out of there, Twitter's rally could have some legs to it. We could start moving a lot higher into the earnings report on the 26th. And don't even get me started. If they crack the heck out of that earnings report, it starts going crazy. EPS, revenue guidance, the stock could go ballistic at that point, which we did see last earnings report they had. The stock did go from 65 to 75, so be ready for a potential move there. Netflix is another one that we've talked about recently with Squid Game. All of these new, I think a lot of the new foreign shows are doing very well on Netflix. Squid Game, what's the other one that I heard of? Alice in Wonderland or some crap. I think these are South Korean shows. They're doing very well. They got the voiceover, the subtitles, and there's one I watched. I'm sure a lot of you guys watched it. Money Heist. I think it's called Casa de Papel or some crap in Spanish. I think that's what it's called. These shows are crushing it, man. The production's unbelievable. I'm serious. Money Heist especially, that production, unbelievable. Great show. These shows are bringing in a lot of new business to Netflix, a lot of new customers. People are signing up, especially now with Squid Game being, I think, the best show in history of Netflix. People are signing up hand over fist, and they're going to watch not only Squid Game, but also a lot of other shows, whether it's American shows, foreign shows with the voiceovers, cartoons. I have no idea, but It's bringing in new subscriptions, monthly subscriptions, which a lot of them will not cancel that. They're going to pay it monthly, and that means more revenue, more money for Netflix. So that's why the stock has been ripping up like crazy, and they end up they're going to report on the 19th. So that is about 9 days from today. So that's in the beginning of not this week but the following week. And I'm going to be looking for maybe a pullback on Netflix towards those moving averages on the 4-hour chart, anywhere from 600 580, that's where I'd be looking at it. But now I will not be FOMOing into it at these all-time highs. And the last one that I'm looking at here is J&J, which admittedly we were looking at it on this 4-hour chart at about 166 when it was holding the bottom of this channel, but it's not holding it anymore, guys. You can see it collapse even further. It went from 166 down to 158. It went down another 5% from where we were holding it, and overall, or not holding it, looking at it, and overall, J&J is down about 11% now from its all-time high. It's in correction territory, and if you guys didn't know, if you maybe you didn't see the update videos or whatever, I used to own J&J, but I actually sold out a couple of weeks ago, and that was in my, what's it called here? In my process of raising cash, raising capital. I did that across a lot of my accounts. I sold some stuff, and I raised some money, and I took profits literally before the September sell-off. I'm not saying I'm a genie, a wizard, anything like that, but I did raise a lot of cash in August, mid-August, early August, late August, as we were getting pretty high in the markets, and it ended up serving me right because I think I sold J&J at like 170 something. It went to 180, so I did miss some gains there, but now it's at 160, and a lot of stocks have tanked as well. So yeah, guys, don't be scared. I guess the moral of that little side tangent is don't be scared to trim some profits when things are getting hot, because when markets turn red, and don't get me wrong, you can't time it all the time like I just timed it, but when the markets go red, you'll have some extra buying power. You would have locked some gains, which is always nice. And now with J&J reporting earnings on the 19th, 9 days from now, who knows? They could get worse. The stock could go lower, and maybe I'll buy back in. You never know. So overall, that's it. I'm going to wrap it up here, guys. If you enjoyed this video, make sure to hit the like button, subscribe. Let me know your thoughts in the comments, and check out my Patreon. If you guys want my real-time buys, sells, call-outs, morning update videos, plus more, all of that's on Patreon. Link down below, or you guys can go to StockSurfest.com/Patreon. Make sure to also get your $30 from M1 Finance, or 2 stocks from Webull. Those are linked right down below. And if you guys want to see my M1 Finance portfolio update, my most recent one, which is a portfolio, if you didn't know, that I started for the YouTube channel from $0 all the way to where it is today, check out my video from earlier today. I'll pop it up here. Go watch it. You'll see my portfolio for the YouTube channel. Check it out. Let me know your thoughts. I'll see you guys there. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.